Alright, so it's been a little bit since I made my last video, and I just wanted to come on and give an update about what I've been doing. So, right, I had a blow up day, which I still need to publish the video for. So that'll come soon. Um, but I blew up, and I needed to step back and really focus on my edge. And what happened is I reached out to some professional traders I chat with regularly, and I was like, all right, I'm focusing on too much. I'm going to master opening range breakout. I'm going to master just gap and goes and gap closes, just going for opening range breakouts and opening range reversals. And because I'm like, oh, I need to define what I'm going to do better, just focus on one thing. And this guy named Andrew, he was like, "No, you're still not getting it. You have to, you're overcomplicating things. You're focusing too much on the setup." And what I realized is I was not keeping it simple at all. I mean, he was exactly right, and I don't know of that many professional traders, people that trade full time, but the three I was messaging with that day who don't know each other all said I was overcomplicating things. So kind of a light bulb moment for me. And so then I hop on a call with Andrew, and he basically just explains like, you need to narrow down your focus, keep it simple, focus on the daily, focus on the hourly, just focus on who is making money, who is in control of the markets. So, I have my trading guidelines that I keep next to me all the time, and I've updated them like 11 times so far since I started making them. I update them very regularly. They started off pretty crummy, but I just knew I had to keep working on it so it would get better. And with time and experience, I would be able to take stuff out, add stuff in. So I keep it short. I want to keep it on just one page so I can read it pretty easily. It looks like kind of a lot, but I've been reading this so much that it's basically, becoming memory at this point. And that's where I would like it to be. I'd like it to be so ingrained that I don't even need this. I mean, I'm always going to have something as a reminder. So yeah, I have my guidelines, and I just have a simple set of questions that, I want to look at that help me like focus on what's important. I won't read all my guidelines, but if you want to copy, just comment or something, and I can find a way to send them. But let me read a couple. Trading is a mental game and a performance activity. You don't need more knowledge to be successful. Your behavior and your relationship with yourself, your rationality, and your discipline, this is what determines whether you succeed or not. So yeah, rationality and discipline, most important traits, I think. All right, after rationality and discipline on my guidelines, it's all just about a reminder to look at who's controlling the market. You don't want to fight them if if the bulls are on your side, you're above yesterday's high, and it's not a market where you expect sellers to be above yesterday's high. You don't want to do anything but be long. You want to wait for a pullback, and you want to join the market. Next item, 2 useful strategies. When you enter a trade, before you enter a trade, but when you enter and while you're in the trade, accept with an A and accept with an E. Accept and accept that you are wrong and expect to be uncomfortable. So by expecting you're wrong, you're managing your expectations, and trading is just uncomfortable. It's very hard. So by expecting to be uncomfortable, you're already these 2 rules are about managing your discomfort. No forced trades, develop sit-out power, and no big losses. Always respect risk, only trade proper setups you have a reason to, be confident in, keep losses small, don't average down, or keep repeating the same idea. Don't fight the big guy. So again, it's about not fighting the big guy, emphasis on him. And those, the no forced trades and the no big losses, that was from a tweet that Mark, I think his last name is Minervini. He's like a U.S. investing champion. That's from a tweet that he made. Or no, it was a YouTube video. He has a really good YouTube video about like, I don't know. Comment if you want me to send you the video. But Mark Minervini, if you just search him on YouTube or Twitter. I mean, his Twitter's great, but that's how I found out about him. But his YouTube, he has a really good presentation on there. I have a rule about ego. That's this really big long one here, and managing yourself. In trading, the market is your enemy, but you are your biggest enemy. That's how it starts. And it talks about the addictive nature of trading, how you don't control the outcome. You just control like what you do before and after the trade is on. Everyone says they want to be a trader, but 95% can't do blank, which is like stay out. Patience for the big guy to show control. Patience for the right opportunity to join. Hard part isn't making money, but keeping the money. Another statement about managing expectations. There will always be more and better opportunities. Focus on the process, not the dollar amount coming in and out of your account. Don't focus on the P&L statement. Just focus on what it takes to be a good trader, guys. A goal without a plan is just a wish. Antoine de Saint-Exupéry, that French author, great quote. A goal without a plan is just a wish. Got that from a friend, mentor on Discord. It's like in his bio, and I just love it so much that I had to include it, because you need a plan in trading. If you don't have a plan, you are taking a random trade. And in a wicked learning environment, in an environment where you can do the right thing and be punished, and do the wrong thing and be rewarded, like trading, like poker, just like these really non-typical performance activities, probably chess, I don't know. It depends on your opponent, but whatever. I'm getting into the weeds here, but you need to have a plan. If you don't follow a plan, then you're off process. And if you don't have a process, you're going to lose. You might win for months, you might win for weeks, but you will lose if you don't have a process. What else in my guidelines? You are not as smart as you think you are. Many trade ideas, but too much knowledge is a curse, because you need a simple, precise plan, which is follow the big man and be patient. Like, say you can guess where the big man is. This is a really important concept. Like, if there's one concept you take away from this video, let it be this one. Understanding who's in control of the market, it's a pretty intuitive thing. Like, kids can do it. So let's say you can determine who's in control 70% of the time. Now, it's not just enough to be right. You have to execute and time it right. So if you're right about the direction, if you guess who's in charge 80% of the time correctly, but you don't wait for an opportunity to join the big man, like participate in the market, you have to get that part to a high percentage as well. Like if you're guessing who's in control and getting it right, high percent, but you're entering at the wrong time and you're only participating with him effectively 20% of the time, you're going to lose, right? Like, it's anyone can be right on the market. But you have to protect your capital, right? You have to you have to have a strategy that lets you join and participate with the big man in an effective way. What's next? Just 2 Jesse Livermore quotes. It was never my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight. Men who can be both right and sit tight are uncommon. And then what else? Oh, and then the trend is your friend. And I put in brackets, I said the trend, big man is your friend. So let the big man reveal himself. They can't just buy and exit like us. They gotta slowly enter, or if not slowly, multiple points typically. But in pre-market, they can manipulate it, and they'll fake like a sell to buy in at a better price, and they'll fake a big buy rush to sell down at a lower price. So just be wary of that too. If you're going to go off process, at least use smaller size. Don't fight the trend. Focus on just taking 1 to 2 great trades a day. Ignore most impulses. 2 losses a day max. The best management rule is set and forget. So just make the trade, walk away. Al Brooks calls it a Walmart trade. But just make your trade and don't interfere. What else? Stick to a real edge. Use type 2 thinking. So this is a Daniel Kahneman, Amos Tversky concept from Thinking Fast and Slow. Awesome book. Check it out. Consider biases, heuristics. So there's like the endowment effect, which is pretty similar to anchoring, I believe. Not a super... I love psychology, but I'm not a psychologist. I think anchoring and endowment effect are pretty similar. There's confirmation bias. There's probably an official name for it, but I just coined it as the abundance of options bias. In fact, I know there's a name of it because I've heard it in Modern Wisdom podcast, Chris Williamson. But as it relates to trading, abundance of options, like the market's built to show you a million opportunities. The market's job is to make you think you can make money so it can extract as much money from you as it can and leave you penniless. And your job is to take money from the market. So I'm losing myself. So abundance of options. You just have to reject most options. You have to focus on a specific inefficiency that you can exploit. What's next? Loss aversion bias. So this is another Kahneman Tversky concept, but basically, and it's proven, and they measured it in their lab. But the pain of losing money is twice the positive feeling of making money. So, yeah, losing money sucks. We'll do whatever we can to avoid it. Go back to rationality and discipline. I actually have a definition of what it means. So making the specific right play for the current ever-shifting conditions, having stay-out power, managing yourself, focusing on a simple edge that you have confidence in, and then I list some edges. Pull back to the moving average. This works great on the hourly, the 15-minute, and the 5-minute. Nested cup, flags, breakouts and coils, failure test, antes. You know all these setups, but it just has to be supported by the big man who is moving price. Whoever's making money, your job is to identify that and then join them at the right time. Okay? And the best time is after contraction, after it pulls back, a mean reversion. Not guessing when the bottom of that is, but once they start going your way again, they show you, the big man shows you, hey, I'm back, I'm buying this, or I'm selling this, and I'm moving price the way I've been moving it. Once they come back, you enter, you place your stop loss below the pivot if it's long, or above the pivot if you're going short, and then you let it ride, and you go for 1R, 2R. Your win rate will be pretty successful if you do that. And you want to mainly be going for base hits, but you can go for a bigger hit if it's the right market conditions, and that depends on what's happening before in the daily. But yeah, last one is kind of something a lot of traders, I feel like, don't think about, but mental capital. So you only get so much mental capital each day, so much bandwidth. So you got to spend it wisely. We are not like doctors or lawyers where we're specialists. We're more like athletes as traders where we perform. So our job is not to specialize and know things. It is to take what the market's giving us. Oftentimes traders will isolate themselves and not want to know what's going on outside because they want to focus on just performing. So we're performers. We're like athletes, and you have to make sure you're fed, exercise the body to quiet the mind. Breathing exercises, meditation's awesome. I meditated every day last year for 10 months for at least 15 minutes. I stopped because I was like, do I really need to do this? Is it really doing that much? So I stopped for like 7 months in October to end of April 2024. So October 2023 to this year recently. And I started getting so stressed out, and I was having like an extra heartbeat called a PVC, preventricular contraction, because I was just getting so stressed. And meditation helps a lot. Exercise helps a lot. Focusing on what you can control. So, Stoicism and Zen Buddhism and all that, those philosophies. Be careful when you're sick, when you can't focus, when you're busy with other responsibilities. We're pretty much at the end. After victory, tighten your helmet straps. Be mindful of winner's tilt and house money effect. Because after you win, you're likely to be complacent. So, yeah. There's the ancient samurai saying, after victory, tighten your helmet straps. You got to be very careful after a win. Because, it's not about what you make. It's about what you keep. And if you win, it's easy to get complacent and forget about what led you to winning in the first place, which was your Zen-like patience, your religious zealot-like discipline, just other stuff, More factors than just discipline and patience, but those are very important. And that's what I struggle with the most, because trading is addictive, and I fall into those addictive tendencies sometimes. I want to be stimulated. Ed Seykota says everyone gets what you want out of the market, and part of me definitely wants stimulation. His full quote was like, people, some people win by losing. I don't know. I'll put the quote in the video. But yeah, that brings me to the end of it. Let me know what you think about these guidelines. When I started this video, I did not plan on going over these guidelines, made the video way longer, but you know, part of these videos is just to help me get my thoughts out there and engage with people, and I want to continue to post because, you know, YouTube is a very fun and engaging hobby, and I like it a lot. So and I love, it helps me grow and hopefully help others. So yep, those are my guidelines. Here are some other things I like to ask myself on screen, so you can pause it and take a screenshot and look at this. And the first 2 bullet points are basically like an assessment. The next 2 bullet points are to determine a bias. Third bullet point, the last bullet point, there's 5, is about action. It's a call to action, but it doesn't demand action because you need stay out power. So yep, that was a long, rambling, kind of jumbled all over the place speech, but I feel like, you know, if you're a trader, that these guidelines might help you, and you should absolutely establish your own set of guidelines for your particular style and follow it, because you need rules. You need to follow rules, and if you don't have them, you don't have a good enough process. And a lot of people focus way on psychology without focusing on the process first. And the process part, if you're retail, if you're independent like me, that can take a very long time. Even if you're in a institution like a Trillium or an SMB Capital or a T3, you know, a proprietary type firm, it can take them like up to a year to train you. So if you're independent without people, you know, it's taken me, I've been at this, started trading my freshman year of college, which was 6.5 years ago, when I was just barely 18 years old. Now I'm 24, turning 25 in June, and I got bit by the trading bug really hard. It's funny, in my first semester of college is when I started getting into trading. My last semester is when I'm like, wow, I really kind of want some financial freedom. I want to do this more seriously. So that was beginning of 2022. So we're almost at 2.5 years of me doing this. And I'm finally at a place where I feel really good. I just have to I'm still trying to find a little bit more consistency before I go live, because I just learned how to view the markets in a different way, in a simpler way. Thank you, Andrew, if you ever watch this. I finally can view them in a simpler way. So now I just have to focus on the execution piece, like making sure I'm picking who's right, but then also make sure I'm joining and participating with that market maker at the right time so I don't get stopped out. And it comes down to patience and waiting for them to give me an opportunity where they pull back, go my way. Of course, there's reversals too, and there's breakout plays, especially like out of consolidation, because you know those can be really good. But yeah, and you got to think about ranges too. But it's just all about listening, okay? And if it is rangy, just only buy at the key areas. Buy at the bottom of the range, sell at the top of the range. Don't go for home runs, mainly go for base hits. Trends move in 2s and 3s. So just count the ABCs. ABC counting is really helpful, I think. Yeah, I think that's all I want to say. This video is like 25 minutes already, so appreciate you listening to my monologue. If you did watch, if you're a trader or an investor, comment, give me some constructive feedback. I want to know what you think. Tell me your favorite part of this video in the comments too, so I can maybe make more videos like this or focused on whatever. So, peace, guys. Thank you for watching. Thank you for your time. I hope this helps.